in the end, all markets are the same. They're prices of which, products are offered, whatever you want to invest in, and there are exchanges or brokers that offer them. So at essence, they're the same thing. They just happen to be more volatile than assets that most people are used to investing in because they're earlier stage in their growth cycle. It's kind of like liquid VC. So it has more volatility. Anybody who's invested in a startup and speaks to the founder of a startup, one day they're going bust, the next day they're going to be billionaires, the next day they're going to be bust. And that's how crypto markets are, because you're early stage. So it's before you've got the large products, before you've got product market fit, all of that stuff. It's riskier, but you're more than compensated in the returns over time, or historically have been. And therefore, I've spoken to many institutions about this, and they understand that this plays a role in a portfolio. It's actually a portfolio diversifier over time and can actually dampen risk of the overall portfolio and give further upside. So if you put it into a standard asset allocation model, you tend to find that Bitcoin, ETH, or a selection of these can do extremely well for a portfolio and still dampen volatility. It's a very interesting area. The only difficulty is obviously regulatory clarity in the US has been less than in other countries. So that's been difficult, but that doesn't really apply to the institutions as much. The hedge fund industry is still pretty nascent, doesn't have a lot of money in it. So there's less liquidity, I guess, is the other issue. There's not yet the sort of liquidity they're used to from equity markets or commodity markets. It's a smaller market still. It's still, $1 trillion, and those are all hundreds of trillions of dollars markets. There are single equities like Apple is worth 3 times the entire market cap of crypto, and that's just one company. So you're dealing with something that's less liquid, more volatile, has a potential over time to accumulate better rewards, but it comes with the risk of the kind of volatility we get used to. Once you've been in the space for a while, you realize that it's pretty normal every 3 or 4 years that it all goes down 70%. When you zoom out, you realize it's gone up 500x over that time period as well. So
BTC erases recent gains as US GDP disappoints. Bitcoin edged lower once again on Thursday as traders continued to capture profits following gains on Tuesday. The latest drop followed data revealing U.S. gross domestic product growth in the second quarter that undershot expectations. Ethereum likewise declined, dipping under $1,700. Spot Bitcoin ETFs face SEC delay. The U.S. SEC postpones decisions on 7 spot Bitcoin ETF applications from major players like BlackRock and WisdomTree. This delay is aimed at allowing more time for a thorough review of the proposed rule changes. Decisions will now extend to mid to late October, with a notable 75% approval possibility. Regulatory scrutiny continues. The SEC's decision follows Grayscale's recent legal victory and the growing interest in spot Bitcoin ETFs. Despite earlier rejections, companies like BlackRock have continued to pursue approval, highlighting the ongoing regulatory evolution in the crypto space. Spot ETFs await green light. While futures-based Bitcoin ETFs have been approved, spot Bitcoin funds are still pending SEC approval. The delay signifies cautious evaluation, but experts maintain a positive outlook on eventual approval. Now let's continue our enlightening discussion with Raoul.
In 2012, during the European crisis, I realized that none of your money in a bank was safe, and that most of the financial system was built on so much leverage as well, and nobody knew who owned what. And I thought, this is a real problem. And I'd gone around the world trying to start a bank, actually, the world's safest bank at the time, which is not an easy thing to do. And while I was struggling with that, with regulators and all of these people, somebody said, hey, have you looked at Bitcoin? And I saw Bitcoin and realized, okay, here's a digital asset that can be thought of like gold, but this blockchain allows us to have the recorded ownership of everything in this distributed manner, and that was very powerful. That started that journey for me as well. So I became an investor. I wrote the first ever macroeconomic strategy paper on Bitcoin in 2013, and was an investor from then onwards, and have been on the whole journey. My thesis was that these two worlds of the new world of digital assets, blockchain technologies, and the financial world were going to meet. And so we were educating people in real vision, and I had been part of this journey, learning from as many people as possible. 2020, they all met. in a spectacular way. And people realized that the financial system and the printing of money and so many other problems could be solved by this new technology. And now it's become much more commonplace. That led me to start another couple of businesses because I started building a hypothesis of not only that this technology is going to get adopted in many ways by individuals, but institutions are going to want to invest in it. And right now there was a lack of product for them. And also that corporations and brands were going to build on it for the future of marketing, loyalty, brand engagement, community, and a lot of the other benefits that come with Web3. So I started Exponential Age Asset Management, which is a fund of hedge funds that invests in digital asset hedge funds to capture the opportunity for institutional investors, family offices, high net worths. We find it complicated to invest either in VC, because sometimes it takes 10 years plus to get any money, and also in individual hedge funds, because individual hedge funds are riskier than a basket of hedge funds. So we thought, I know this, I know how the industry does it, so we'll do that. And the crypto industry is already slightly starved of capital. There's not that many secondary market participants, and after this cycle, a lot of the trading firms have closed down. We need a larger group of secondary capital. It can't just be retail investors. So that's that idea. And then on the other side, Science Magic Studios, we've been talking to many of the world's largest cultural brands in the line of music, entertainment, fashion and luxury goods, and sports, where we think Web3 can really help.
Don't forget to join us as we explore the unfolding events. Biden's regulators urged to work with Congress on crypto regulation. A number of U.S. lawmakers have urged regulators, including the Securities and Exchange Commission, SEC, to work with Congress on crypto regulation. Chair Gensler's regulation by enforcement is unlawful and does nothing to protect consumers. It's time for Biden's regulators to work with Congress to provide clear rules of the road and robust consumer protections through legislation, said the House Financial Services Committee. Bitcoin miner Iris Energy dives into generative AI, investing $10M in NVIDIA GPUs amidst soaring demand. On August 29th, the publicly traded Bitcoin mining entity, Iris Energy, revealed its acquisition of 248 NVIDIA H100 graphics processing units, GPUs, at a cost of $10 million. While the company emphasized that its primary focus remains on BTC mining, it views generative artificial intelligence, AI, as an enticing additional opportunity.
Almost every institution that I speak to, whether that's a hedge fund or a pension fund or an asset allocator of some sort or a sovereign wealth fund, understands this. So the question they ask themselves is, how can we not have an allocation to crypto? So by the time they got to that point, because these are slow moving and they have a lot of work to do internally to get the approvals, what you tend to find is the cycle ends and everyone's like, whoa, they kind of are aware of the volatility. So I don't think it scares them as much, but they just now want the confirmation that the volatility is out of the way and the next phase is coming. So that was the big thing that I saw in this cycle versus the previous cycle. The previous cycle, we saw some participants coming on, people like Fidelity. They started to come into the space. Some of the bigger hedge funds like Brevan Howard had come into the space. Soros, More Capital, these giant hedge funds, they'd all explored and invested in the space. This time around, the 2021 period, pretty much everybody did the homework. And you'll have seen it at Binance. Everybody's seen it. They've all had a lot of conversations with all of these people. Family offices became much more involved this time around as they understood it. How can they preserve wealth in an environment where the central banks are printing currency? How can they preserve wealth in an environment where where you don't know if you could hold onto your assets if a banking system goes under, that kind of issue. So we've definitely seen that. We've seen the rise of, on the trading side, we've seen the rise of more traditional hedge funds investing in this space. So the large asset gathering hedge funds have all traded in the space. They're still not yet comfortable with the volatility. Some of them are, some of them aren't. Others span off whole hedge fund units like Brevan Howard. So Brevan Howard Digital is a giant in the space now. And I think we'll see more of that.
And that concludes an insightful episode of Money Talks. If you enjoyed the video, Don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.